Hey everybody, it's time to start our series on essential estate planning, and this is for everyone. Estate planning is not just for the wealthy. The wealthy have plenty of games they can play, and unfortunately some of the wealthy strangely don't actually use them. It's amazing to me. So all the way down to I just own a house and a car and a mild bit of savings, you've got to have an estate plan. This is more about just trying to make sure you don't leave a huge mess for your heirs. All right, so let's jump into the basics. I've got 4 parts to this series. We're starting with the basics. So first off, what is estate planning? Well, it's the creation and preservation of wealth and distribution to heirs and charities. Okay, that's a simple sentence that says kind of what all it is. But the important part for you to understand is it's maintaining control during incapacity. What if you get dementia? What if you have a stroke? What if you get hit by a truck and don't die? Okay, somebody's got to be able to make medical decisions for you. Somebody's got to keep your bills paid, things like that. So that's the important part of some of this documentation we're going to talk about. It's the quick and cost-effective wealth transfer upon death. Not everybody needs a trust. A trust just makes things really complicated. So we do have to be careful about our misconceptions of what that means and how that is done. And then it's protecting the beneficiaries from themselves and others in some people's cases. We had a client pass away, son and daughter come in, they got it split 50-50. The son cashed out all the money, paid an enormous amount of taxes, and went and bought a very fancy car. And the daughter invested for her future. So sometimes we want to put some protections in place. Sometimes we want to try to stop arguments, things like that. The more clearly you put your stuff together, the less problems that we see with these heirs. So what is your estate? Well, it's everything. People tend to forget a lot of their net worth, whether it's jewelry or even antiques. If we went to the Antiques Roadshow and showed them half your furniture, are we going to walk away with millions of dollars? Do you have a Lamborghini in your garage? What is this? And you know, what is your net worth? How do we get the jewelry to our heirs? How do we get the real estate to our heirs? How do we get the investment accounts? How do we make sure the antiques stay in the family and that they're treated as family heirlooms? Well, we want to make sure that we are very clear in our directions. Otherwise, the fighting begins. The big part of this is making sure we have the right documentation. Okay, documentation is going to be at the center of an estate plan. It's clearly conveying your wishes legally. That's what all this is. Okay, so when does your estate plan have to be created? Well, the real answer is before mental incapacity, before anybody can claim that you're not mentally of sound mind, right? Some of us, that's arguable at this point, right? So now, when do these documents, if you have them, actually come into play? Well, if you choose the trust route, which I'm going to break down the will or the trust route. Unfortunately, everybody seems to think they have to have a trust. Well, not everybody needs to have a trust. So if you have a trust, that begins its useful life day one when you create it. It's kind of like starting a company and making yourself the CEO and writing a document that says, here's all what happens in the future and who's in charge and what they're to do. That's what a trust really is, okay? And whether you do a will-based plan or a trust-based plan, you're always going to have your power of attorney documents. Okay, that comes into play during mental incapacity, okay, or anything prior to death when you can't make the decisions yourself. Think about it like that. If you can't communicate, somebody's got to make medical decisions, somebody's got to be allowed to pay your bills. But notice, when you pass away, the death line right here, the death line, the power of attorneys are no good. They're done. They have no useful life anymore. Power of attorneys are only for while you're alive, but incapacitated. Okay? Catastrophic illness triggers the living will. Living will is the one that says pull the plug, don't pull the plug, feeding tubes, no feeding tubes. It's really your care plan. It's really guiding the medical power of attorney on the decisions that need to be made. Then when you pass away, the executor right here, the executor of your trust takes over because you wrote that document. This company you built called your living trust, you said, when I pass away, this person's in charge. Well, that executor is going to take over and distribute the way your trust states. Now, if you don't have a trust, that's what your will is for. So you'll have beneficiaries listed on everything that you can, and then the will says how to disperse the rest. All right. And you always want to have somebody in charge. You can call them the executor. You can call them whatever you want. They're just in charge of making sure the will is distributed the way you want. Okay. Then, what are we all afraid of? Why do we keep getting told we have to have a trust? Well, some states, if you own real estate, the only choice to transfer that real estate is through a trust. So in some states, the trust is really what you need. Probate can be scary. Can. It doesn't have to be. Some states even have simplified probate process. Some states, it's taking years to even do the simplified probate. So understand this is going to be state by state because probate is based in the state where real estate was owned. That's usually how they're going to discern which state is going to be in charge. Now, if there wasn't real estate owned, it was where they called their residence. Things like what was the address on their tax return is really what's going to determine that. Okay? Now, when we look at probate, well, what if you owned real estate, say, in Arizona and Minnesota? Like many people, they're snowbirds and they live half their life in one place and half their life in another place. Well, probate will occur in both states. That's the hard part, and that gets really messy because now the states are going to argue over who lays claim to what. So here's the thing. Probate with documentation, with a will, with a trust. And I see as many people go into probate that have trusts as I do with wills. Just so you know, for some reason that surprises people. I see just as many go into probate with a trust as I do with a will. And I live in Arizona where it's much more simplified. The life in Arizona is much easier when it comes to estate planning. So when we have a will, that guides the courts. You still have to go through the process. But the reality is they have something to say, here's what the wishes were, and it makes it much easier. Without documentation, all bets are off. Courts are in charge. They have to figure out who you are, who your heirs are, what you own, what you owe, all this stuff. You can imagine it's a terrible mess if there's zero documentation. The courts don't know anything about you. So that gets long and drawn out and gets scary, and that's what you need to be worried about. Each court where property is held will appoint a personal representative, okay? So again, if you own real estate in multiple states, you got two courts, with multiple representatives trying to figure out who you are and what you have and all that stuff. And now they start communicating with each other and saying, well, no, they're mine. Their primary residence is here. No, it's over here. No, it's over here, because the primary residence lays claim to the entire estate's net worth, whereas a second home or an investment property, things like that, they only lay claim to what's in their state. So it creates problems when you have real estate in multiple states. If they end up in probate, that's a problem. So they have to notify the public. They have to air your dirty laundry. Hey, this person passed away. If you want any of their stuff, come get it. That's a process all in itself right there. Then these personal representatives have to locate and value everything that you own, which they knew nothing about you. So that's not exactly an easy process. They also have to go through and discover any debt that you owed and get that paid off first too. And then if there's anything left over after they take some for themselves and pay people off and do this and do that, then they got to figure out who to give it to. And that's just going to be arbitrary based on their own decision in the courts. Obviously, if there's kids, that'll come first. So the courts will retain control over the probate of the estate. Any actions taken have to be approved by the courts. And look, costs are all over the board, especially if there's multiple properties, especially if it gets drug out in to years, it's going to cost money. So to me, it's crazy when I see things like Marilyn Monroe's case or Elvis's case, James Gandolfini's case. Prince is just a big disaster as well. It's amazing when we see these cases of very wealthy people that didn't have any documentation that anybody could find. It's crazy to me. How do you have a net worth like this and not create a plan to pass this to your heirs? It's just amazing to me. So we want to avoid the big mess. I think that's the obvious one. We need to have a will-based plan or a trust-based plan. And depending on your situation, which the upcoming parts I will go through this, one may be easier than the other. I can tell you, especially here in Arizona, the will-based plan is by far the quickest and easiest way to transfer things to your heirs. Okay, so we'll talk about these, but the amazing thing is they're very similar. Okay, in a will-based plan, you have a will, you have a living will, which is that document that says pull the plug or not, or feeding tubes and stuff like that. It gives the medical power of attorney some guidance. Okay, then you have your medical power of attorney and your financial power of attorney. So both plans have medical and financial power of attorneys. Both plans have living wills. The only difference between the trust-based plan and the will-based plan is the trust is created. Again, kind of like creating a company and making yourself the CEO and drawing up a document that says, here's what happens. But the cool thing is, you see that thing called a pour-over will? You actually have a will in your trust, and that will, if you read it, typically just flat out says, oops, I forgot something, whatever I forgot, put it in the trust. And that document is only useful if you have to go into probate. That's right, it's so common that they have a standard document in trust-based plans called a pour-over will that is only useful if you have to go to probate, because it happens all the time. People don't put their plans together properly in a trust-based plan. They say, oops, I got my trust, I'm all done. I don't have to worry about probate. My heirs are fine. I have a trust. I hear it all the time, but I discover things like cars, or oops, I never put the house in the name of the trust, or bank accounts, or the last one I saw was over $100,000 of treasury bonds in the back of a desk that we had to get from the treasury. They had a full trust plan, but that caused probate. So we got to have a plan. We got to have documentation. So in the next two parts of this series, I'm going to break down the will, and then I'm going to break down the trust-based plan. So I try to make this as useful as many people as possible. Hopefully you see that this is going to be for everybody, right? Because even if you're uber wealthy, somebody needed to tell you that you've got to have some form of a plan whatsoever, because you typically don't want to leave an absolute disaster mess for your heirs. Even if you feel you have a very simple situation, you still need some basic documentation. So hopefully you like this. Subscribe to our channel if you haven't. It'll let you know when we get these new videos out. Shoot us an email, give us a call if I can help out in any way. Certainly make comments below, like the video, share it with friends, and I'll see you next week.